Hello, my name is Pei-Rong Liu. Today, I'll represent the financial analysis of Apple. This is the contents. I'll introduce Apple. As we all know, Apple is a global leader in consumer technology with a market value of 3.735 trillion. Apple ranks as the second most valuable company globally. Apple has maintained its industry-leading position for a long time, thanks to its outstanding performance in hardware products such as iPhone, software services such as Apple Store, and innovation. This is the timeline of Apple. Apple is founded in 1976 by Steve. In 1984, Macintosh launched with graphical user interface. In 1997, Steve Jobs retired. In 2001, iPod released. In 2007, iPhone launched. In 2020, M1 chip introduced. This is horizontal analysis of balance sheet. I choose the year of 2023 and 2022. And we can see accumulated deficit is huge difference. And you can see equity and liability. Listener comments. Accumulated deficit decreased a lot. Stockholder equity increased by 8.9 billion. Total liability decreased by 11.6 billion. This horizontal analysis of the income statement, we can see the sales and net income. They both decreased, and research and development increased. Sales and net income in 2023 decreased, while an additional 3.6 billion was invested in research and development. And next is component percentage balance sheet. We can find liabilities is accounted for 82.4%, and the total the assets in 2023, the proportion of current assets accounted for 40.7%. This is a certain level of short-term asset flexibility, with current assets primarily consisting of cash and marketable securities, which are highly liquid and pose a low liquidity risk. The proportion of total liability accounted for 82.4%. It has a high leverage to enhance shareholder returns, but it may have potential financial risk. Next is component percentage income statement. The cost, we can see the cost, it keeps decreasing, and the research and development, it keeps going up, and operating income is around 30%. The net income is around 25%. Yeah, so we get this. The percentage of cost of sales to revenue has been continuously decreasing, while the proportion of research and development expenses to sales has been increasing year by year. Apple has good operating profit margin, around 30%. Next part is financial ratio. The first one is return on equity. It measures a company's ability to generate profits from its shareholders' equity. This is the formula, and we can see it decreased in 2023. Apple has exceptional profitability and efficiency in utilizing equity, but the ROE decreased to 156 in 2023, reflecting a decline in profitability relative to equity. Next ratio is earnings per share. It indicates the portion of company's profit allocated to each outstanding share of common stock. You can see it's similar these 2 years. Next ratio is total asset turnover ratio. It measures a company's efficiency in using its assets to generate revenue. We can see in 2022 is 1.12, in 23 is 1.09. It decreased because we can see the sales. You can see the sales is decreased. Next ratio is current ratio. It evaluates a company's ability to meet its short-term obligation with its short-term assets. You can see in 2022 is 0.88, in 23 is almost 1. It indicates strong liquidity and the ability to comfortably repay current debts. The next ratio is debt to equity ratio. It measures a company's financial leverage by comparing its total liabilities to shareholders' equity. Debt has decreased, equity has increased. Apple lowers leverage and the financial risk has been reduced. The final ratio is price over earning ratio. It indicates how much investors are willing to pay for $1 of the company's earnings. We can see in 2023 is 28.25, and in 2022 is 23.9. This means investors' expectations for Apple future profitability and growth prospects has risen. Next part is management's discussion and analysis. I found the reason why total net sales decreased 3%. The weakness in foreign currencies relative to the US dollar accounted for more than the entire year-over-year decrease in total net sales, which consisted primarily of lower net sales of Mac and iPhone. And the reason for equity increased by 8.9 billion. In May 2023, the company announced a new share repurchase program of up to 90 billion and raised its quarterly dividend from 0.23 to 0.24 per share beginning in May 2023. June 2023, the company repurchased 76.6 billion of its common stock. The final question: do we buy stock of Apple? My answer is yes. Apple stock is worth buying. Although Apple has relatively high leverage ratio, it has sufficient current assets, strong risk resistance, and an impressive operating profit margin of around 30%. Additionally, Apple placed great emphasis on innovation, with substantial and increasing annual investments in research and development. Purchasing Apple stock is a good choice. These are references. Thanks for watching.